Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at pound dollar here today, one of the major pairs that maybe hasn't been on your board in recent months because the pound has been one of the lesser volatile pieces against the US dollar. And that's actually gone for recent years, even amid the biggest swings in Forex. Over the course of the last couple of years, the pound has held in relatively better than, say, Australian dollar, Japanese yen, or even euro, but not recently. Pound falling to new year-to-date lows and getting close to new lows for the last year plus of trading. And this is all coming amid the strong U.S. data that we've seen in the last couple of trading days. U.S. dollar strengthening against most major pairs, but that pound actually slipping a little bit more than your Aussie or your yen in recent trade. Let's take a look. Pound now trading under 126 and eyeing that 125 price that it's been able to stay over for the last couple of months. And so this is new year-to-date lows, and I know it's only February here. But like I say, the pound has been one of the stronger pieces. And so if this one starts to slip, then maybe we do get into that territory that we were in a couple of years ago where it's just all out US dollar strength to historic levels. Not quite there yet. Have a couple of different levels that we have to get to first before we get to that type of territory. 125 would be a big one, and then after that 120 is really the low for the last year or so of trading. We'll take a look at that in a second, but recent price action, new year-to-date lows, under 126, eyeing 125. We'll see if they bounce off of that or plunge through it for the first time in a couple of months. What's going on is mostly U.S. data coming in stronger than expected, and the most recent piece is this U.S. services PMI. It's a light data week here in the U.S. As we enter the middle part of February, but this another one that came in as a beat. And maybe the services PMI doesn't technically mean too much for the dollar, but broadly speaking, seeing so many data points here in the U.S. that are translating to just potentially higher inflation and the need for interest rates in the U.S. to be higher for longer, and what that could mean for a Forex pair like pound dollar if the UK starts to cut before the US, or the euro dollar if the ECB starts to cut before the US, as their data has been coming in a little bit weaker than the US is here to start the year. And the big number recently was this employment piece where they were expecting around 170, 180,000 jobs and came in over 350,000 jobs for the February non-farm reporting on January. And this isn't just a beat where you see, oh, they were expecting 170 and they got 200, and maybe you see a flurry of US dollar appreciating by 30, 40 pips, and then it's trading back and forth. This is a huge beat, and not only that, but the biggest non-farm payrolls number in over a year, which is, on the face of it, of course, U.S. strength, stronger U.S. data, good for that U.S. dollar relative to the U.K. and these different economies. But it is being translated, like I say, as potentially higher inflation for longer than expected. The Fed wants that inflation down at 2%, and if employment is still beating expectations almost twofold here, then maybe we're not getting there for at least the next handful of months, maybe even this year, and maybe they can't cut as soon as possible. And so if they're not cutting interest rates, maybe the continued demand for dollars relative to a pound, relative to a yen, it continues like we saw in 2022 and in parts of 23. But let's take a look at the bigger picture for pound, because like I say, it's been a relatively stronger piece. That dollar is already very close to its highs against the yen, for example, or Aussie is very close to its lows against US dollar in recent trade. Whereas this pound piece still above 125 and obviously above 120 and not as close to its lows. I know it flashed down to 105 in, I think, one trading day and then bounced back not only that day but in the weeks to follow. And so I would call the low here in pound really like the 105 to 110 range, and still, over 1,000 pips away from that. But we'll see if it does slide further. 125 would be the next piece here. If it doesn't bounce off of that, will it hold that 120 level that has been, as you can see, the low for the last year or so of trading that's held in every time we've seen these spurts of US dollar strength? And of course, this could go two ways, right? You could see the pound slide further on weaker UK data. Maybe their inflation gets down to 2% and they're looking at cutting interest rates faster than the US, or continued stronger US data. And if either of those flip, maybe you get this bounce back before 125. But a lot of different potential outcomes on the table. Let's take a look at where traders are positioned using IG's client sentiment that incorporates data from all IG clients with open positions in this market. And you can see 2/3 of traders of pound dollar long that pound, short that US dollar. As we've seen a continued theme here across a lot of the pairs, which is dollar strengthening again, getting close to its recent highs, year-to-date highs against a number of these major currencies, and people getting on the other side of that move, looking at maybe you call it a contrarian play or a bounce back. Of course, anything can happen in the coming days and weeks for this pound dollar, but as of right now, sliding down to close to 125, and we'll see if it moves further. There will be plenty of data throughout February, one pointing to U.S. inflation, but also UK will have, I'm sure, employment and inflation data coming throughout the month that will move this pair as well.